discuss what is a black swan event. A black swan event is a rare, unpredictable, high impact event that's outside the realm of normal expectations. In trading, it causes sudden extreme moves that most people never saw coming. So, what are the key characteristics of a black swan? They're unpredictable, it comes out of nowhere, no one sees it coming, has extreme impact, it causes massive moves in price and volatility. It's rationalized after the fact. People try to explain it after it already happened. And here's a nice diagram here of outside the realm of normal expectation is the black swan event. What are some examples? So the 9/11 terror attacks in 2001, the markets plunged 4.9% that day. The shock to the global markets and geopolitical stability lasted years. 2008 financial crisis. I lived through it. It was very difficult, but with real estate, for example, when the market turned, it happened very fast. The market, our our condos, what happened is that the price was going up $10,000 a month in the Bay Area. Then all of a sudden, 1 month it plateaued, and then the next month it went down $10,000 and kept going down. You could survive as long as you reduced your rents. And the one phrase I heard from a seasoned real estate agent was you need holding power in real estate, and that really came in handy. So Lehman Brothers collapse triggered a global market meltdown. S&P 500 fell about 57%. Then just recently we had the COVID-19 pandemic, 2020. The markets crashed 30% in weeks. Lockdowns occurred, uncertainty occurred, unprecedented economic shutdown. Brexit vote. Unexpected vote shocked markets. The British pound dropped 10% in a day. And then the Russia-Ukraine war in 2022, commodity prices spiked, markets sold off on uncertainty and supply shock. So how do black swans impact markets? So violent price moves, sudden crashes or spikes in stocks, bonds, commodities, and currencies. Volatility explodes. The VIX, the fear gauge, surges as panic and uncertainty hit. Liquidity dries up. Spreads widen. What is a spread widening? What does that mean? The gap between the buyers and sellers gets much bigger during a panic. This makes it more expensive and difficult to enter or exit trades. Trading halts sometimes. There's automatic halts now for periods of time, and it's hard to get in or out of the market. Correlations break down, diversification fails, so everything can drop at once. Black swans don't follow technicals, they ignore patterns and history. How traders can prepare. Manage risk first. Use proper position sizing. Risk only a small percentage of capital during this time, or just get out as you see this coming or as it occurs. Get out fast. Preserve your capital. Have a risk plan. Know your stop loss levels. Define your max loss per trade. Keep cash on hand. Dry powder gives you flexibility when opportunities occur. Dry powder is another word for having cash on hand. Stay informed, not surprised. Watch global macro, geopolitical, and central banks and the news. Be flexible and adapt. Markets evolve, so should you, your bias and positioning. You can't predict black swans, but you can survive them. The big takeaway, black swans are rare, but they will happen. It's not a matter of if, but when. Focus on what you can control, your risk, preparation, psychology. Protect your capital so you can stay in the game. Survive the storm so you can profit from the recovery. Risk management is your edge. Survival is the first rule of trading. If you found this presentation valuable, please like and subscribe. If you have a chance, please sign up for my Patreon account. I have a memberships premium tier. I answer all these questions to the left and more. Have a great night.